Okay, guys, so I have a little lesson for you guys today. I think it's pretty interesting, actually. I think it's actually very interesting. It's something that you guys might not be doing currently, and probably why you're losing a lot of money sometimes with these optimal timed entries. But before we get into any of that, let's first establish one thing. I'm Chike investing, all right? Last year, or was it the beginning of this year, I was saying you can't call me Chike, just call me Chike investing. But I've evolved so much that I'm gonna stop being petty. I think you guys can call me Chike. This is a big day. This is a really big day. So you can call me Chike. That's fine. I'm gonna be doing a giveaway very soon, by the way. So you guys stay tuned as well. I'm in a good mood nowadays. So before we continue, guys, make sure that you like and subscribe. Like the video, subscribe, please. Just do it right now. Just get out the way. Just before you continue watching the video, just like it right now, subscribe, because it really helps me and my channel grow. It helps us grow, because the bigger we get, the better we become. All right, so let's move on to today's lesson, and let's not waste any more time. Okay, so I wanted to show you guys something very interesting. Now, usually I'm always doing videos on like when is the best time to or showing you guys strategies or different particular instances where you could have gotten in here, you could have gotten in there, could have done this. By the way, I want to fully disclose I'm not a financial advisor by any means. I'm not suggesting that you should buy any specific or particular security whatsoever. I'm just going over general trading principles that I've learned throughout my career. And here's the thing, right? I am a big proponent of not setting limits, right? I don't want to set limits. I don't want to set limits, okay? I always do market order entries when it comes to OTE. And I'm going to show you guys why. A very particular case happened this morning, something I knew I had to make a video on, right? So let's go to forexfactory.com. This is a website I like to use because I always want to keep in mind what are the particular events that could happen today that could probably adversely or even help my trading, right, for the day. So we saw that, you know, if you're trying to trade, let's say, for example, a USD pair, right? There were two red folders coming out today. That's the ISM Services PMI and the ADP non-farm employment change. Now, this one doesn't really matter because it's not within our OTE time zone. Remember, OTE is from 8:30 a.m. to 11 a.m., right? And we'll put that on the chart. So 8:30 a.m. to 11 a.m., okay? And then this is very relevant though, because it's a red folder. The yellows don't really matter. They're low impact, right? Orange is medium impact, and red is high impact. So usually what I like to do is actually I like to filter, you know, take away the yellows, apply that filter, right? So there's only reds and oranges. So you see that these two really come out in the time that is relevant for our OTE, right? Our optimal timed entry. And we'll go over, if you don't know what that is, we'll go over that in this video as well. But you can see that this came out at 10 a.m. So when we're trading and we have any trades open that have to do with the dollar, we need to be careful around 10 a.m. because anything can happen. And anything did happen this time. It really did. Because look at right here. Around 10 a.m., look at this spike in the dollar index. What does that translate to? This is the dollar index at DAXI is basically a basket of currencies in relation to the dollar. So when this dollar index goes up, right, that means the dollar is becoming stronger than most other currencies in the world. So you can see that because the DAXI went up, which means the dollar got stronger, AUD USD went down, shot down crazy. EURUSD shot down crazy. So I like to use the dollar index, you know, charting pattern so that I can see where I am at in terms of the dollar in general, and that might influence my trades on other pairs that are tied to the dollar. Okay, so let's do this. Let's set up our trade for the day. Let's act as if we were setting up our trade for the day and see how we would have factored this into our optimal time trade entry. So we'll go over exactly how that works, right? So what I like to do first is, you know, I have a certain amount of pairs I like to trade. I usually like to trade pairs that are usually tied to the dollar. I notice that they do very well. So, you know, I'll scope around, see which ones look good. You know, I'll start from the daily. Start from the daily chart, right? And actually, I was gonna actually, let's look at USD JPY because that's also another USD pair, right? So on the daily, right, we're having, well, first let's actually set out our previous, this is the first step, okay? Take your horizontal ray, previous day high, get your previous day low, okay? Now you see we've been in a downward trend, okay, with occasional bullish sticks, but usually we've been in a downward trend, right? We're currently in this kind of channel right here. Right now we are in a channel. Right? And until we break this channel, I'm still going to be looking for bearish, for bearish trades. Even though we can see, let's see if this, because we're generally in the longer term structure. In the longer term structure, right, we're bullish. Okay. Higher highs, higher lows, higher highs, higher lows, right? But we're in this pullback, right? And in this pullback, you can find some short-term scalps. I wouldn't hold anything for, longer than a couple of hours, max. But while we're in this downward channel on a retracement in an upward trend, you can make a downward, play, right? So let's just clear all this up. Well, we can see it retraced back down to the 0.705 level, which is probably why we saw that big bounce. Part of the reason why we saw this big bounce here, but that was actually catalyzed by a news event like we saw. But we'll get there, right? So we just did our, a longer term analysis. So right now in USD JPY, we want to be looking for particular opportunities that fit our current time horizon, which is today, this morning. I like to stay in LTE trades throughout the session and maybe max stay after maybe like 2-3 hours after the session, but that's max. I won't hold anything overnight. Okay. So we were just on the daily. This is the previous day high, previous day low, right? We're just gonna check out the 4 hour. Okay, see if anything's pretty relevant. We had some areas like here, 1, 2, 3, 4, all these areas. A lot of liquidity is below here, so we can just just highlight this area, right? There's this place is a magnet. It's being drawn, right? The currency is being drawn down toward, or the algorithms are drawing this down, right? We also got, well, drawing this down because there's liquidity below here, so the algorithms are going to attack the liquidity like they did here. We see this lower lows, lower highs, lower lows, lower highs, lower lows. Okay, and so it's good bearish momentum. So we go into the 2 hour, pretty much same story. 1 hour, same story. So we can go ahead and maybe jump to the 30 minute, pretty much same story. Jump to the 15, same story, and then we land on the 5. All right. So at that point in time, what you want to do, you want to create your vertical line here at 8:30 a.m. Eastern. Create your other vertical line at 11. Okay. So this is your trading window. This is your optimal timed entry. Now, like I said, we were in the bearish momentum, right? Yeah, we retraced down to the 6270.5 level, but it still leaves room for, for downward pressure. So, it could potentially be a quick scalp. I wouldn't say, it's very likely that we're going to get a great scalp, but, it could be a quick scalp. All right, so there are 2 entries here. You can either get it from the top of here, from that last high, and wait till it gets to the 0.62 level. Or if you wanted to be a little bit more precise, you could have done it from here, so you can get a tighter entry, right? Smaller stop loss, better opportunities for risk reward. Okay. So you do this, set your stop loss like that. Now, here's where, this is the point of this entire video. If you had set a stop limit, or if you had set a sell limit right here, you would have gotten your stop loss blown through in less than 5 minutes, right? This is a 5-minute candle. It blew through it in less than 5 minutes, right? And so when you're trading in such small time windows, there's no need to be setting a limit. You're going to be watching the screen for that 2.5 hours. That's all it takes, just 2.5 hours to watch the screen, right? But this is also in the New York session. We see a lot of reversals happening, which is why I like to trade OTE, usually around the UK session from like 1 to 5. See, there are a lot of entry points in the UK session, right? See what I'm saying? Look at right there, right here. 0.62 level entered, 0.62 level entered. So many opportunities. You would have been in profit all morning, right? From 1 a.m. to 5 a.m. basically, all the way till down here, where it got to the previous day low. Okay. Now, you see in the New York session, we got that big reversal, but this is why it's very important, especially in the New York session, to not have any limit set, because we can have this big push up. And that's why you also need to make sure you're looking at the news, right? At 10 a.m., we saw some news that's going to come out with the red folder. If we set a limit, it could have got shot right through, which it did, which is why you want to have a market entry. You want to watch it, right? You want to watch it. If it's hovering around the 0.62 level, right, and it seems to consolidate and then, you know, takes off, then you can get in, right? Or if it you know what I'm saying? You don't, if let me draw this out. If you see it and it's going this, and it shoots up, if you were in a market order and you were just watching it, you wouldn't enter into that, right? But if you see it going up a little slowly, it's creeping up, right? And you see it going like this, maybe creeping up a little bit, but then it starts to head down, downward momentum, you start entering your trade. Put your stop loss above here, market order, enter, and then, you know, keep your profit around this, you know, the negative 0.5 level down there. And so that's, you know, something that I wanted to go over. Just don't have limit orders, right? Enter with market orders. Watch out for the news. And another interesting thing I wanted to point out, actually, on the dollar index as well, you know, use your correlations, right? If you're trading a USD pair, why not just look at the dollar index? We saw here there are some lows to be taken out, right? To come back into this candle, right? That took out this low. And look at what happened. This candle got mitigated. That took out this liquidity right here. And whilst grabbing liquidity from these two lows, perfect trade, that took out this liquidity up here, right? So there was a magnet drawing the candlestick back up here to take out this liquidity, right? After having grabbed liquidity from here and mitigating this institutional candle, if that makes sense, right? So that is all that I have for today. Thank you guys for listening. Happy trading.